Hello, welcome to the program. I'm Ladi Williams. First of all, let's take a look at some of the markets. Well, some are closed, some are still open. Let's see intraday numbers in Africa. Was mostly mixed on the African continent with markets that we track. In South Africa, the JSE closed today for Christmas, but was down by 0.16% on Thursday, while Nigeria's market was a tad positive by 0.01%. In Egypt, the EGX30 closed in the red on Thursday, was down by 1%, while Kenya Stock Exchange gained 2% on Thursday. Over to the Middle East, there was positive sentiments recorded across board yesterday. Abu Dhabi index gained 0.36%. Dubai also notched up by 0.58% close yesterday. Similarly, Saudi and Qatari indexes traded higher by 0.60% and 0.11% respectively. And shoppers in Europe have a final morning to wrap up their gifts buying before traditional Christmas festivities. Retailers across the continent says it's been a less than merry Christmas season so far. From supply chain woes to new COVID-19 regulations, many businesses have had to cut out for the season. Let's go to Stephen Beardsley now, right there in Berlin. Great to have you, Stephen. Well, for months now, there have been concerns that this would be a difficult holiday season for retailers in Europe. What are we seeing now?
Well, there are indeed some worrying signs we've seen so far. Let's take a look at two areas, for example. One is access that shoppers have to stores, and another is supply chain woes. If we look at the access that shoppers actually have to stores, you have to remember that here in Europe, the Delta variant of the coronavirus was really active in the fall and into early winter, if not the current Christmas season, especially here in Germany. Meanwhile, Omicron has really started spreading in recent weeks. That's meant that the entire run-up to this traditional Christmas purchasing season has really been covered also by the heavy spread of coronavirus. And what that means is that for many retail areas, they've had tighter regulations on who can enter their stores. Here in Germany, that often means that those who are vaccinated, those who are recovered, or those who are tested can enter. And in many cases, in areas where it's especially bad, only those who are vaccinated or recovered can enter stores. What we've heard is that we've seen surveys that have suggested that many shopkeepers are unhappy with the foot traffic they're seeing so far, especially on traditional shopping days on the weekends, and that many of them hold the regulations, those tighter regulations, accountable for what they see as a reduction in foot traffic. Now, if we look at the supply chain issues, those haven't been as bad as many thought that they could be. There have been items on the shelves. At the same time, surveys show that there are some areas such as consumer household products and entertainment devices where stores are having trouble keeping stocks as they normally would. Also, when it comes to toy stores, the situation there has gotten better, but in many cases, they are reporting that deliveries are slow. What we expect to see is that demand in the coming weeks could actually get worse, especially as supply could get worse as demand in the U.S. especially kicks up. That could especially put pressure on Europe to keep their shelves full as more and more products manufacturers push to the U.S. and try and keep up with manufacturing globally to their normal standards otherwise.
Well, I can't imagine that, but what kind of mood are shoppers in at the moment?
Yeah, I think that's the other big question right now. We know that from past waves here in Europe, and especially in Germany, that many individuals prefer to save instead of spend. And again, since we're going through this Delta wave here, it's only letting up right now in Germany, and Omicron is beginning to spread. That means that consumer sentiment appears to be a bit dampened right now. Falling in December, again from November, that is a critical time for retailers. Again, so if consumers aren't in the mood to shop, that's going to be problematic. Now, normally there was a bit of a boost this past summer for shopping, for consumer sentiment, so it appears to actually be coming back down to long-term averages. But again, what you normally see is this time of year is there is a bit of an uptick as people shop for the holidays. So it's going the wrong way at the time that's critical for retailers right now. Compare that to the U.S., where demand is actually really skyrocketing at the moment, and that's because, again, the Delta variant there was really it was a lot more dramatic in September really peaked there in September. That meant there actually was a good period in the late fall leading into Christmas where there was normal shopping hours, normal shopping times, businesses were open, and that seems to have also worked into the fact that many Americans have more stimulus money in their pockets, and so that's really ratcheted up demand there. Here you don't see it quite as much, so that is a really big difference between the two sides.
Well, quite a number of headwinds there for this holidays, but are there any bright spots?
Not a whole lot that we can see at the moment. There are some segments that have done well, especially in luxury areas. For example, champagne out of France. The real stuff is seeing a bit of a buyer's boom as many restaurants try and stock up and get ready for the new year, for example. And also households are making more purchases there because more people are celebrating at home instead of going out. Also in luxury autos, we've seen in recent months there has been an uptick in purchases of those. But again, that's a very specialized segment, and that may also speak to how certain segments, certain classes, certain earners are really doing better than other earners who are maybe seeing their wages fall or a bit more worried. One area that we should say that is more generally cross-cutting, in which we are seeing a bright spot, is online sales. And so online sales have been up in recent years in general in Europe, but in the past year they've really risen in a way that they haven't before. So there is evidence that more shoppers are going online, and it will be interesting to see later after the holiday season is done what the numbers from online look like. Again, that could be problematic because here in Europe, there is so much of a reliance on foot traffic. So for many smaller retailers who haven't made that jump to online, that could be problematic for them. There'll be more pressure to make that leap, but it could be devastating still for many traditional city center shopping areas here.
All right, that's Stephen Beardsley right there in Berlin. Thank you so much, Stephen. Now, moving on, the National Crisis and Emergency Management Authority for the United Arab Emirates announced the suspension of entry for travelers and transit passengers from Kenya, Tanzania, Ethiopia, and Nigeria. Well, let's talk to Austin Adeko, our CEO, Gatewind Travel and Tours, to tell us more. Great to have you on the program. Thank you for joining us on the holiday.
For having me.
Yeah, great to have you. So, happy holidays. Well, tell me about this new ban.
All right. The new ban is as a result of the current announcement by the NCDC updates, which was given on the 22nd of December. With a record of 4,035 cases. Recorded in one day. And it will interest you to note that according to the people concerned, the stakeholders concerned, this period is actually, nations are actually monitoring how the COVID is actually the performance of it. So now having 4,035 cases in one day actually caused for serious concern. So that's the major reason why this ban has been placed from travelers from Nigeria.
All right, there was also an issue with Kenya was having refund pressure. This would definitely make things worse, right?
Yes, definitely, because again, most passengers were actually in transit, when this information actually came into effect, and the government gave the order that it has to be with immediate effect. So now, there will always be the issue of who will refund. The passengers are saying it's not their fault, that Kenya Airways should have known this information before boarding them and all that kind of stories. But I think there will be a way out of to sort that out.
All right, and how are businesses reacting to this new ban?
Yeah, well, it's a hard hit again for the hospitality and travels business and the aviation business. Okay, and looking at take, for instance, Air Peace, was actually looking forward to, in fact, they've even been granted direct access, to Dubai. So they were actually looking forward to the route, the Dubai route. And you have lots of Nigerians, who actually saw the window, the opening, to come here to conclude most of the transactions that they've not been able to do over the years, putting into consideration also that UAE is a hub in the international route. So it's vastly affected, businessmen and businesses.
I can't imagine. All right, Mr. Austin Adeko, CEO, Gateway Travel and Tours. Thank you so much, and our compliments of the season.
Yeah, wish you same compliments. Thank you.
All right, moving on now. Markets in the U.S. closed today for Christmas Eve. The major averages rose for a third day on Thursday as investors looked past earlier jitters about the spread of the Omicron COVID variant. Well, let's hear more now from our correspondent right there at the U.S., Maria Bird.
On Thursday, the U.S. stock market closed higher on this short holiday week. The S&P 500 closed at 0.6% higher, the NASDAQ 0.85% up, and the Dow Jones closed just over 0.5% over. It is clear that investors are not believing that the Omicron spread is going to have a major impact on the economy or inflation. It is also clear that investors are believing it and hopeful for the virus treatments and also the new vaccine news. It is clear that as we go into the holiday season, that the U.S. stock market could show a strong closing for the year.
All right, that was our U.S. correspondent there, Maria Bird. Now, moving on, we see Ghana's economy grew by 6.6% for third quarter of 2021 year-on-year provisionally, compared with contraction of 3.2% in the same period last year. The country's growth rate without oil and gas for the third quarter 2021 stood at 8.6%, compared with the 3.0% in the same period last year. The government statistician says when seasonally adjusted, the real gross domestic product increased by 1.6% in quarter 3, July to September of 2021, and 0.5 percentage points higher than what was recorded in first quarter. And the Central Bank of Kenya Act 2021, which is to allow the Central Bank of Kenya license and supervise digital lenders, has come into effect following the presidential assent on December 7, 2021. The amendment provides the Central Bank of Kenya with the powers to license and oversight the previously unregulated digital credit providers. The amendment requires the Central Bank of Kenya to publish regulations within 3 months, and accordingly, the CBK has announced the issuance of draft digital credit providers regulations and has invited public comments on the same. Additionally, in order to facilitate an orderly transition to a regulated environment, the regulators urged all unregulated digital credit providers as the DCPs to submit their business details by January 21st, 2022. So our next conversation now. According to the IMF, Kenya's government has scrapped a plan to fully nationalize the partly state-owned airline known as KQ. Like other airlines, Kenya Airways has seen its passenger business severely hurt by travel restrictions imposed by government to curb the spread of COVID-19 and new variants. Now let's hear more from Limo Toboy, economic analyst from Kenya, about this and more. Great to have you on the program.
Good afternoon.
So tell us about this new change of plans regarding nationalization of Kenya Airways.
Kenya has been part of a program with the International Monetary Fund since 2020, that COVID restructuring and how to assist management. And overall, while the IMF is happy with the progress, it's concerned that Kenya is still vulnerable to shocks for the economy. It has urged the country to prioritize its spending towards its development activity. Now, Kenya Airways is one of 18 state-owned corporations. There are two really big ones. That's Kenya Airways and the Kenya Power and Lighting Company that command special attention. And Kenya Airways has been undergoing a restructuring program. And Parliament in 2019 recommended that it should renationalize the airline. However, that seems to be cards now.
All right, and the Kenya Airways, got a loan, from the government, and with this shelving of the nationalization, How do you think the government is planning to get, most of those monies back?
So the government had guaranteed $750 million of financing to the airline. And in the restructured program, the amount will go up to $827 million, which will now be taken over by the government. What this means for the airline is that its loans will now be booked by the government. And whereas before the government was providing a guarantee, there's still the possibility that if you violate some of the covenants, would lead to accelerated repayments, which would not be good for the airline. But now that they move over to the government side, the government will be able to continue paying them at the normal loan covenants without the accelerated payment. And in the meantime, the airline is going to go through a period of lean operations where they will rationalize their fleet, staff, their operations. And I must say these are things which are already happening with the airline. In 2020 and 2021 has run a much leaner fleet and operations and routes that it's.
All right. Now, looking at 2022, what's your outlook for the national carrier going forward?
So the management of the airline is in a lot of talks with the government and with its shareholders. It's a listed company on the Nairobi Stock Exchange. Ended for about a year. But what's been happening is that they have been quite candid to say, look, the global aviation industry has, in the last 1 year, has lost 20 years of growth. Kenya Airways management really does not expect till 2024 to have a full recovery where they were in 2019. What's going to happen is they will run this lean operation for the next 2 years, and the government will be part of that financing with about another $423 million to the airline. However, this will not be, it will be under more comprehensive package with the IMF, where management will be given, they will have conditions, they will have targets they have to meet, they will have to restructure their supplier contracts, their aviation leases, and present this to the IMF and to the Treasury as a condition for funding. So going forward, they will also do a lot more partnerships. The IMF study concluded a few months ago, and there are still 2 other options which the airline is going through, which will be affected by this. One is a partnership proposal with main airport in Nairobi, which went to Parliament, and another one is which President of Kenya and South African counterpart, they signed an agreement about a month ago, form a Pan-African airline in 2024. So partnerships will be a part of the airline. In the meantime, they're also going to be doing a lot more new things like cargo. They're doing a lot more charters and innovation programs with the Nairobi Tech community.
All right, but what other funding options do you see for, Kenya Airways going forward?
So renegotiate, these are already ongoing, I must say. So renegotiate with concessions with the partners and suppliers, have a leaner fleet. In the last few months, they have subleased 2 of their aircraft over to Congo Airlines, and they have also converted 2 other aircraft which were passenger aircraft, into cargo aircraft. Going forward, there'll be a big part of cargo. They recognize that travel in Africa and travel around the world is still constrained. So they will expect that for the next few years, you will still not have the numbers who were flying in 2019. And this is part of the discussions they have right now with Treasury and the IMF.
All right. We'll keep tracking that airline to see how 2022 plays out for it. That's Limo Taboy, right, the economic analyst. Thank you so much for joining us on the show today, and compliments of the season.
Happy holiday.
All right, so moving on now, back here in West Africa, we see it's Christmas Eve, and headwinds from inflation, coronavirus, and others have dampened Christmas for many in Nigeria. This report takes an in-depth look at rising prices this holiday. Do take a listen.
At a crowded market in Nigeria's commercial capital, Lagos, 27-year-old Blessing Abba negotiates the price of a turkey and other food items as she goes about her Christmas shopping, which she complains now costs more than ever before. The price of turkey is up 25% from 2 months ago. A reminder that prices in Nigeria are still rising sharply, even though inflation has eased.
For Christmas, shopping now is a whole lot because things are more expensive than before. I mean, last time, or 2 months ago, I came to market with 10,000 naira and I went home with a big bag. But right now, I'm going home with just 2 bags because things are more expensive than before.
Abba's friend Ouza Shady, who is a tailor, has doubled the price of some of her clothes in the past 2 years to keep up with escalating costs of fabric and sewing tools.
So 2 years ago, the price of making this outfit would usually go for 25,000, 20,000 naira, but now, just 2 years after, it would go for 35 to 40,000 naira for the exact same style. And this is because the cost of fabric, sewing materials in general, are now way more expensive than what they used to be.
Nigeria exited recession last year, but growth is fragile, and the International Monetary Fund says that recovery will be subdued as the West African country grapples with double-digit inflation, dollar shortages, and the COVID-19 pandemic. Last year's crash in the price of oil, which accounts for more than 90% of its foreign exchange, led to acute shortages of forex and put pressure on the naira currency.
All right, that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Compliments of the season.